Good morning, everyone, and welcome to the sneak peek for the first hour in the Trade Out Loud Futures Trading Room. My name is Anka Metcalf, and today is Tuesday, and it seems again that we're having not a Vaccine Monday, but a Vaccine Tuesday, where we already had some more news coming out of Pfizer. And it is Tuesday, it is December 8th, 2020, it is 9 a.m. Eastern Time. And let's begin with the major economic releases for the day. First off, Tuesday, I'm sorry. Is this, I'm sorry. Hold on just 1 second here. Okay, here we go. All right, so I just thought I'm sharing a different screen, and I was just trying to do a little sound check here. Okay, so today, Tuesday, we do not have high impact releases, and in fact, this whole entire week is going to be relatively slow. In terms of releases, earnings season is slowing down as well as we're heading into next week and into the holiday week. So don't forget that this month we are going to have a relatively short month because of the Christmas holiday and of course the New Year's holiday as well. Also, holiday trading is characterized by slower volume, but that doesn't necessarily mean that this is a bad thing. It just means that the trend continuation and the trend pattern is going to be more focused. So that means that we're going to get a little bit more trendier kind of market if we're going to be in line with most of the prior events that we have had on record, historically speaking, in price action. So today, we do not have any economic releases for the rest of the day. And in fact, the next day where we can expect a little bit more catalyst from the market is going to be Thursday when we have the unemployment and claims. And that's pretty much it on the economic front. Again, the stimulus is also going to be on every trader's everyday agenda, and we need to keep that in mind. Any stimulus can potentially push the market higher. So let's begin with an overall look at the relative strength and the relative weakness, and if we see any divergence into the market or synchronicity. We're starting the market with, I would say, a relatively very shallow bearish momentum. The Dow is down about 100 points. The S&P is down 15 points. Nasdaq is down 33 points. And we have Russell, which is down 9 points. So what does that mean percentage-wise? Well, what it means is that we're having a little bit of a steeper pullback in Russell in the overnight trading session. We had a little bit of a steeper pullback into the mini S&P, and we're having a shallower pullback with more support into the Dow and into Nasdaq. And what I would like to do right now is actually start the structure analysis for today's session. And for this, I'm going to transition to another chart. So please give me a 1 and let me know if you guys can see this and can also hear. Okay, perfect. All right, that's great. Okay, just wanted to make sure. Okay, so all right, so we're going to begin with Russell analysis. And in fact, Russell analysis, we're actually popping off of a double support spot. And the double support spot is actually right here that happened in the overnight trading session. And this support spot was the origination for this shallowish pop into the market, but at the same time, we held the 20 SMA. So we have a prior pivot low from yesterday's trading session that was revisited, and this was the area right here, creating the double bottom into the 1875. Also, I should note that into this location, you can see that we have a rising 20 simple moving average. And what that means for price, every time the price is above the 20 simple moving average, any kind of rotation that is happening off of the 20 simple moving average, especially when it's happening on a 4-hour chart or so, you're going to get a much more let's say, push to the upside, a bounce. That doesn't necessarily mean that we're going to have the velocity to the upside or to the downside just yet. So the velocity area the velocity area is an area in which you have multiple, let's say, structures and multiple resistance spots that are going to be breached by price action. And if we digest the 1887 spot, which is marked here with purple on the line and says bullish above, we could potentially see the price ignite higher, and definitely it's going to land into the double top formation. So this is a very interesting formation, right? So we have a double bottom and we have a double top on the hourly chart. So if you could switch your charts, you could see it on your platform, double top and double bottom on the hourly structure. And the price has come into the 1887, which is the core of the range. If we break above the core of the range, then we have the potential of a continuation higher into the 1878 spot and even higher into the 1900. We do have further targets for higher into the 1910 and 1920 for short term. So this means that we're relatively bullish into this stage, right? Because if you take a look at your overall charts, and if you look at the daily structure or the weekly structure, I'm not going to bring them up here, but if you're looking at these higher time frame structures, the daily charts, in fact, are really maintaining a very bullish power trending scenario, which means that we're trading above the 10 exponential moving average. The moving averages are fanning out, so we're having the power move to the upside. Now, the reality is that from the daily structure, we are a little bit extended and we caught a bubble of air. It's called a little tradable void from the 1850 spot and 1850 to 1855, and that is a confluence spot. So if we, let's say today, throughout the trading session today, we breach the 1875 level, there is a scenario that we can pull back into the 1860 to 1855, and this is going to be the minor support spot for the pattern. Keep in mind that if this scenario is going to play out, you need a lot of information in order to short this area, because this is not going to be as easy as it seems. Because once the price is going to get near the 1860 to 1850, we may see a bounce off of this area, because price proved in the past, and in fact on December 2nd, that once it did a shallow pullback to the 10 EMA, it popped. Also, it had a pullback into November 20th, shallow pullback, actually a 2-candle pullback on November 20th, and it bounced back up. So this is from the daily structure. And also we had the November 12th, and we also had the revisit on November 5th. So this means that we're engaging into this massive power trend for the upside. So this is very good for a continuation higher and promoting this continuation higher. So as long as we're maintaining this channel, we will definitely try to remain bullish. If we start breaking down below this spot right here into this support, into the 1873, there is the scenario that we may get the pullback. Now, I would not necessarily be very, I would say, aggressive in shorting the first breakdown right here. So this would be the breakout spot into the 1773. So it's right below 1873, right around this area right here. So it would be below. So if we, let's say, create 1 or 2 or 3 candles to the downside, I would very much want to wait for a retracement and a confirmation that this is a good area to short. So I would like to have the price pop back again into this prior support, now resistance for price action, and then I would like to short it, because in this particular scenario, I will have a much lower risk into this spot right here than I will have right here, than I will have into this range. The problem with the ranges that we have had throughout this entire transition time from COVID, from the February, March, April market all the way up to now, is that we have had our good fair share of ranges, and these ranges have been very choppy and have proved that resistance is key element and also support is key element, and anything that happens in between may be a chop box. So you may try to go long, you're going to be stopped out. You may try to go short, you're going to be stopped out. So we have to have a lot of patience for confirmations into this area. Now, don't forget that we play with some very important timings into the market. We have a series of reversal times. We have a series of major reversal times, minor reversal times, and we also have a series of trigger times. And my preferred trigger time, especially in a market that is squirrely like today and undefined right off the bat, I would much rather wait for the 1030 segment until I have all the proof. I have at least the first hour of trading in to the session, and the decision has been made, the calibration has been made. And that is, to me, the best confirmation that we can possibly have into the 1030. And oftentimes we get that. I would say about 95% of the time we do get our triggers into that zone. All right, so this is Russell. So like I said, from this structure, definitely if we start breaking above 99, and again, 99 yesterday was a big breakout area as well. So over 99, it's literally going to start expanding higher. We do have another target into the 1910, 1920, 1935, 1930, and 1935. So again, you can see here from all the chart patterns, if you zoom in on, your 1 hour segment, is that prior price action here to the left-hand side, in fact, for about 2 weeks has been relatively sideways. And we just broke out on Friday. So on Friday was the breakout in the Russell that broke over the 1860. So Russell is characterized by creating these really massive ranges in pattern, because we had the range from 1860 all the way into the 1800s. So about 60-point range right here. And again, you can see how sloppy it is, because you have the confirmation that say, hey, high, lower high, then a high, then another lower high, then another lower high right here, and a lower high. And everybody thought that this is going to fall from the face of earth, which it didn't. It just tested this prior support spot. And this was exactly the 10 EMA on the daily chart from which it rotated. So that's why I mentioned the 10 EMA on the daily chart as being, as having a really high impact on price. All right, and we're going to continue with the Dow. All right, so from all the time frames, and I'm a true believer in reading higher time frames, because this is where smaller time frames are getting their information from, especially when day trading. And you hear me mention weekly charts, monthly charts, daily charts, hourly charts, where in fact when I gearing into the open, I'm more focused on the 1 minute chart and 2 minute chart. But the accuracy that comes from that our method is based on, it comes from these very high time frames, and multiple time frame alignment is the decisive factor. Not a lot of traders, again, especially in the futures market is relatively harder to trade than day trading stocks, because it's a lot more whippier, and in terms of the heavy weighted contract size, definitely takes the toll on traders. And I can easily understand why a lot of traders are blowing up accounts, because they don't know how to adjust to certain market conditions, and a big fault is not knowing how to position size for it. So the Dow has visited, and by the way, this is a massive confluence area into the 850. There are 4 layers of support into this area alone from multiple time frames. We also have a 10 exponential moving average, and every single time we revisited this area in this ascending scenario on the daily chart, we popped. So we are looking for a continuation higher off of this 10 EMA. 10 EMA is just that shelf of support, let's say the first shelf of support, the first trampoline that if the price falls into, it's going to bounce back up. And again, here we had, like I said, a multiple confluence spot. We also had the 200 SMA that created this really nice trampoline for price for it to continue higher. Now you can see here that I have some markings, and this is support for current price action. You can see that right now the price is trying to root into this 950, so it's trying to find support, and this support is also coming from multiple time frame alignment, but it's also coincidingly very nicely positioned here, because you can see that we had this shelf into the 950 that held the overnight price action, and then at 6 o'clock in the morning, boom, down we went. And remember, we had a similar type of washout in the trade yesterday. You can see this bar right here that happened at 3 o'clock. So we have these massive washout bars that are in the market, and sometimes these are forced sells created by institutional traders so they can grab more contracts out of all the available contracts that are there, and that meaning stopping a lot of retail traders out, and then they force push the price higher, and in which case they pretty much did in every single scenario. Now, I'm not going to be complacent and say this is going to be ultra bullish, but I'm going to tell you this is a high, lower, high, lower, high, lower, high, lower, high. So we're trying to set up a little bit of a downtrend here, even though this is not a confirmed downtrend, because the daily chart is still massively up. But again, if the price is going to start breaking in, I need to see a 1 hour close at least above 29.95 in order to start progressing higher. Okay, so basically, if we see the price over this 91 level, then we could see higher price action. So again, we're gonna basically what's happening here is that we're coiling around this 30,000 spot, and because we're coiling around this 30,000 spot, this is not weak at all. So the more it trades into the, let's say this purple line right here into the 29,991, okay, the better will be for price, okay, because the price may potentially break out higher, and the next target is going to be into the 30,050. If we break over that spot, which is the key area, actually we discussed it in the trading room yesterday, that 30.55 over 30.55 is going to be bullish all the way to 30,165. 165, again, I feel like, I'm like a broken record, because we keep on, talking about these levels, because these levels are so important and have been on the chart for a little bit, for a little while. So again, these are the potential target spots. These are bigger targets. Again, these are established off of these bigger time frames, and these bigger time frames have the capacity to come in and play out a major role for smaller time frames. Because if you're going to see a print throughout the trading session today of 30,055, the price is going to get really immediately sucked in into the 30,165. So it has that power to pull the price into the targets. So the structure is relatively neutral. 10 minutes before the open, we definitely have 10 minutes before the open, and we're going to wait and see what the trading session is going to bring us. I also like to look at the 4-hour charts. You could also see a nice bounce. We have a confluence support spot that we spoke about into the 850. We also have support into the 755. So right now the market is neutral. We're not bullish, we're not bearish on the trading environment today. All right, let's switch to the mini S&P, and then we're going to run some commodities. So the mini S&P is also a little bit stronger, I would say, and that is because we have a shelf of support into right here into the 3665-ish zone. And again, here we're trading into this cluster to the left-hand side. The left-hand side cluster is really, really problematic for price, okay? Really problematic for price, because if we don't break above the 80 area, and in fact, we need to break the 87 area, but this is going to have a really small progression. So basically, this is going to be the first step right here to break above the 80. If we break above the 80, we're halfway there. So we may have about 50 to 60% chance of getting the price higher into the 87 or so. All right, let's switch to Nasdaq. And Nasdaq is a little bit stronger. I've noticed that the rotation, and we played it out in the stock swing program. We played out more and more of these semiconductor plays. We played more Nasdaq stocks than anything else, and that is because we had a massive push into it. Now, there is one thing that I want to mention. Remember, this has been a COVID year. And remember that there has been a massive, massive buying pressure into the Nasdaq stocks, as they were seen as safe haven, right? These stocks may have a really high odds, and I'm talking about 85%, 80 to 85% odds of transitioning into a potential window dressing. So we may have a power move into the end of the year into these Nasdaq stocks once again. And you could see that the rotation happened because we were a little bit weaker into Nasdaq, and now we're getting a little bit more of a push into Nasdaq compared. So if you're looking at all the charts that we let's say analyzed so far, you're going to see that Nasdaq is advanced, right? And Nasdaq is trading right now above the first level of resistance right here. So this is very, very good for price, because breaking this cycle of, let's say, the potential, let's say, downtrend on smaller time frames may create some bullish environment for the rest of the indices. And remember, they're not all created equal. So I don't like to, let's say, have tunnel vision and say, oh, I'm only going to trade the M and the S&P, because guess what? That's what the herd is trading, the M and the S&P, because they don't know any better. So I like to trade what is in play that day. And what is in play that day is pretty much obvious after analyzing the pre-market, so doing the pre-market game plan. And also, I like to, hey, stop, run steady. Guess what? The market hasn't opened yet. I don't trade before the market open. Okay, so this may not be for you. Okay. So basically, what I'm trying to say is that we're still trading in a channel in Nasdaq as well. So if we break above the channel into the 12,604, then we have a clear shot of a much higher target, and we have targets for throughout the trading session today into the 12,632 and 12,694. Now, if you have been listening to what I have said right now, we do have some elements on the chart where you can see that if you do decide to trade in the pre-market open, okay, guess what? Guess what? You could already been, so stop, run city right there. If you have watched this chart right here, you could have been in this trade, okay? But you weren't, because it says here bullish above, and this is the support. So this is your entry, this is your stop, this is your target 1, this is your target 2. Easy peasy, okay? All right. So I'm also going to run 2 commodities before the open. Okay. And let's see. All right. So oil is a little bit into turmoil right here. And that is because it's doing a daily pullback rotation. So that means that it's not necessarily bearish. It means that it's pulling back. And the problem here is that you're seeing this topping tail, which is a sign that you could see a pullback. Hey, if you don't mind, stop, run city, you could just either, show all the panelists and attendees what you're typing, okay? So individuals like you, okay, that says, okay, let me read it out loud. Sorry, coulda, woulda, shoulda. I was hoping to see some live trading. Guess what? I don't trade before the market opens, the New York trading session. So this is not for you right here, okay? So if it's not for you, guess what? Yeah, you can leave right now, okay? All right. Awesome. Okay. All right, everyone. Sorry about that. Of course, there are individuals here that want to see a trade right now. Okay. So if you have patience, you have the money. If you don't have the patience, you're never going to have the money and you're never going to make it in this industry. So you have to make sure that you really analyze very well the market before you engage into a trade. Because the number one reason why individuals are losing money in the market is because they're anxious. They, guess what? They engage into a trade without knowing the environment right now. So without knowing whether you should be bullish or bearish, just go head first and head into the market. All right, I want to share my thoughts on GC right here. And GC is massively waiting for a breakout. So if it trades over 1874.5, actually you can start moving higher. I would like to see it. It already had a peekaboo high right here. So this is, again, a really massive breakout that can happen right here. So this can potentially be a breakout entry into the 1875. So this could be the entry into not could be. This is an entry into the 1875. The stop is 1860, and you're going to run into a first target. You know, and the first target is a little bit asymmetric because the first target is into the 1880 and the second target is going to be into the 1884 to 1885. But if we break above the 1885, guess what? 1900 is going to be the first target. Okay. All right. So I'm also going to share, we still have a few more minutes. Okay, to the open, and then we're going to have the calibration. And let's move to bonds, because there is some very interesting price action that is happening to bonds. And in fact, this is a trade idea. This is a swing trade idea. Okay, and we have 175.27 for an entry above this spot right here. And the stop is going to be this 20 SMA, and we're going to look for a target of 183.18 to 183.20. So this is going to be a very nice cluster right here. Okay. Yes, you could actually trade whether it is GC, that is the full size, whether it is the micro MGC, which is the 10th of the size, or YG, which is half the size of the full size contract. All right. And one very interesting trade idea as well is NG. This is natural gas right here. And I'm going to pull it into the 1H chart. All right. So there's another range. So again, today's market is characterized by a lot of ranges. It is going to be bullish long over $2.48. With a stop of $2.38, and the target is going to be into the $2.52-ish area, 52 to 54. Again, this is also going to be the run for the gap fill. This is also going to be a short squeeze right here. And it's going to have a second target, as you can see it right here, into the 260. This can, again, be either a day trade or a swing trade. And remember, the difference between the two is that if the price doesn't follow through immediately into target, then obviously if the stop is not violated, we are going to keep it as a swing, right? Until targets are achieved or until we have the stop that is met. All right, we have a couple of more seconds into the open. I am going to move my screen and we're going to watch for some potential trades happen. All right, here's the open. All right, so I'm going to move my charts to the 5-minute. Just the indices. And by the way, okay. All right. By the way, Russell, right here, very interesting because it's getting very closer. I like the formation here. Now remember, this is just the open. This is just a calibration. One thing that I did not mention is that I also watch the stock market because, like I said, I don't have a preferred index that I trade because I trade what is in play that day. So as you can see, GC has already triggered right here, and we have the first target into 80. The second target is into the 83 to 84. When it approaches 84, then we're gonna look to raise the stop. Most likely we're gonna move the stop into the break-even territory. What I like to do if you're using multiple contracts, and obviously for trading with a bit of size, and it is recommended to scale out into targets. All right, we're having divergency from Nasdaq, as you can see here. So remember that we spoke about Nasdaq as being one of the strongest index right before the open. It was chugging along higher, and all of a sudden, guess what? All right. Now, all of these levels that you see here on our charts, the moderate bullish above, they can all be traded. However, the problem is that if you really want to trade them before the market opens or right after the market opens, you have to use a bit wider stop. So in this particular case, you have to use the bottom of this pivot right here. So you have the support spot into the 950 that we spoke about 30 minutes ago. And you can see the bottom of the pivot is into the 930 zone. So your stop would be in the 930 zone. I would like to wait for another formation to happen. If I have a setup, I trade it. If I don't have a setup, I don't trade it. I'm very selective. I only take between 1 to 2 to 3 trades maximum a day. And that's why I have a really high win ratio on my trades, because I look for a lot of confirmation. I'm just not reckless getting into the market, and I wait for a really perfect pattern, a perfect setup. If I don't have that, I don't have to trade. Yes. Hey, Riaz. Yeah, GC. Hey, guys. What are you guys doing in here? Okay. Yes, I'm already in GC, just like I mentioned. At 75, the stop is into the 60, and we're waiting for the targets right here into the 84. Hey, Michael, I was looking in the other room. So right now I'm running 2 rooms, guys. We have our trading room that is open, and I'm here for just about an hour, and that's it. All right, so we're getting a lot more velocity right here into the Dow and into Russell. Nice action. Nasdaq is just a little bit too choppy at this point. If you're looking for a tighter stop, so my bread and butter is trading the indices. At this point, I want to see a 2-minute formation that can potentially bring the price in YM for a shallower pullback, so I can have my entry. We're having divergency. I definitely do not like to trade divergent markets. We're having 3 indices that are stronger, and we have Nasdaq that is weaker and acting up right now. What I'm seeing from the overall stock market is that the Dow stocks are relatively strong and holding. We have Boeing inside day. We have Disney that is holding the daily structure. We have financials that are strong today, and this is one of the reasons why the S&P is a little bit more bullish. So financials and oil are helping right now. Energy stocks a little bit stronger as well. Nasdaq stocks are really sideways right now. Also, Amazon very sideways, just into the 20 SMA once again, 3140. That's not good for Nasdaq. And also Google, these are big stocks within Nasdaq that are sideways. Nvidia pulling back a little bit right now. BABA just borderline dead right now. Same with Microsoft. Apple, etc., a little bit more bullish. Semiconductors are strong, however. So we're having the SMH that blasted with a new high today. Other than that, we have a lot of chop into the stock market right now. So I'm not seeing that incredible relative strength, let's say, into the Dow components and also into the S&P components. Hey, Laura, under 62. Under 62. Wow, very divergent. It's just going to probably be a matter of time before there's either going to be a massive decision here into the 1250 and a rotation, or we're going to see some pullbacks into these indices. So the first, let's say, reaction into the market is going to happen in about 5 minutes, and that is into the 945. The momentum is not good for Nasdaq here. Very divergent market. Like I said, we have the Dow higher, S&P higher, Russell higher, and we're having the pullback in Nasdaq right now. All right, next decision. Basically, we're trading right now into the 2 o'clock, 3 o'clock, 4 o'clock highs into the Dow and into the mini S&P. All right, we have gold that is triggering higher. We have also oil that is triggering. See, I would like oil higher here, but I don't like the fact that the trigger is coming right into the 10 EMA, and this may reject the price at this point. This is not bad right here, but I don't like the risk to reward ratio. The entry would be, let's say 45.70. The stop would be 45. No. And then a very small target into the 80. All right. So like I said, in about 4 minutes, we're going to see some pullbacks happen right now. It's the timing with the market. So we're getting very close to the 945. Really bullish YM here. Very, very bullish YM. All right, GC's performing well. 7 ticks into the target one at 80. Sorry guys, I didn't have to. I usually post the parameters of the trade, but now I'm running 2 rooms and I didn't get a chance to. And by the way, all the trades that I comment on as being this is the entry, this is the stop, this is the target, I take all the trades. I take all my trades, and it's not a simulated account. It's not it's a live trading account. We don't do anything simulated here. We're here to make money. My #1 goal is to make money. All right, here's an interesting part. We're getting ready for a reversal in YM. And we're also getting really good reversal signs in Nasdaq. So Nasdaq may have been, again, a forced sell by institutions and then a rotation back to the upside. 5-minute high lows, 5-minute highs have been having continuation from the New York trading session charts. It's just a very choppy market. It's not your typical trending market. Hey, Laura, we love money and money loves us. Definitely. Definitely. We do love money. All right, 4 ticks into target 1 in GC. I would like to see it trade more into the 83s before we raise the stop in it. All right, so you can see that we're approaching right now 945, and into 945 right now, we're probably going to see that pullback created. This is going to be the moment of truth right here. If we end up in a doji right here, we could do, the next decision is going to come in about 15 seconds. This could possibly be a short squeeze. I'm more interested in a pullback in YM than this, but this could be a short squeeze higher. Gonna have a little bit wider stop, but you can position size for that using micros. Okay, here it is. Be 50, already trigger 50. Okay, let's just wait for that calibration a little bit, because the entry would be 58 to 59 by this low right here into the 30s. We're also having these, I don't really like it because it can get rejected by these MAs right here. And you can see the price, see the reaction. Yeah, I'm gonna skip this. All right, we have a doji formation in YM. If we get a print of 30,020, the price is gonna get to 3,000, and at 3,000 can likely become a buy spot. So I'm more focused on creating the buy spot into 10 o'clock. Maybe we could get the 10 o'clock reversal. Russell, very strong. You can see that all of these indices are trading above our bullish above spot. So anywhere into this area, no shorting. No shorting. When we're trading above a bullish above spot, we are always going to look for pullback buys. And even if you see this rush to the upside, just sit on the sidelines. Don't get in, because there are certain reversal times into the market. And there are also, here are the targets right here. There are also areas from which you're gonna expect pullbacks. So whenever, you know, a lot of times very new traders, they see green, 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 they start jumping in. They see a little bit of a stall here and they go like, oh, if I could get here and if I could get like 2 ticks or 4 ticks to the upside, I'm gonna be really happy, without having the right analysis and the background of the move. Take a look at the divergency that's happening in Nasdaq. Definitely this is going to put a print on all the indices sooner or later. So let's just wait and see what happens. In the meantime, we are two ticks away from achieving target 1 in GC, 2 ticks away from achieving target 1 in GC. And that is 5 points. From 75 to 80, that's $500 per contract. If you're trading the full size. If you're trading the YG, that's $250. If you're trading the micro, well, that's 1/10 of the size. All right, so as you can see, there's no engagement in oil here. No engagement in oil. Oil is simply getting, and it's stuck here into the 10 EMA. This is a complicated pattern. We also have a prior pivot low, and that is from Friday. That is creating resistance. So bingo, we have a confluence spot right here. All right, so let's take a quick peek at the 30-minute, because we're approaching the top of the hour. So we had a big push right here. The 1 hour, again, very bullish. So we have been trading for the last 3 hours into a heavy momentum to the upside. And again, if we start breaking above the 30,056 area, in fact, into the 77, you see a dotted line here, you see an MA here, you see another dotted line here. This is massive resistance. If it trades over this spot, any pullback buy into this area is going to bring the price higher. 15-minute, again, you can see that 200 SMA right here. It's going to create rejection, and it's in line with reversal time. So what did I tell you? That at 9:45 we're going to get a pullback. 9:45, it's for a pullback. Now, depending on how this 9:45 pullback is going to react, we may have a rotation that is happening into 10 o'clock, okay? So 10 o'clock can act as a break to the upside. I definitely like I mentioned, you know, about 40 minutes ago when we did the pre-market game plan, I like to wait for 10:30. I have enough information at 10:30 to reach a decision whether the market is going to go higher or lower, where the calibration is, and what are the true range for the day. All right, here's the pullback. You can see the decision right here at 9:40, and you could see it. You could see right here on the 5-minute. See the red bars on the 5-minute and YMNES, okay? And Russell's still holding. It's a matter of time. It's a matter of time. So I said that YM. I would definitely like to trade more YM and Russell today than anything else. So if we get the price below 30.20, we're likely to pull back into 3,000. I would like to see the pullback into the 3,000 into 10 o'clock. And then at 10 o'clock, a rotation that may punch the price higher. And Nasdaq is really, really choppy right here. It's not bullish and it's not bearish. It's just very much sideways. It's just revisited the support spot. We have the support spot that was defined by the prior low at 6 o'clock. We also have these prior resistance areas that now became support. Excuse me. And actually, this is minor support spot. And it's nothing else but like a big baby base, right? All right, so we need to see a break of 600 in order to have the continuation higher. Now, there's an option. I don't like to trade this option, but more aggressive traders can potentially trade off of the support spot with a very tight stop. Let's say they can buy into the 35 with a stop at 20. Into this area right here, very, very aggressive, into the 2 minute once they see the support spot right here for a short squeeze. I typically don't like to do that aggressive, and especially as we're coming into 10 o'clock. 10 o'clock is the biggest reversal time in the market. No trades yet. All right, you can see that the momentum is not sustained into Nasdaq. I like YM, not bad here. Still 50 is that big breakout spot. You can see it right here. So it can potentially, so even if it trades above 50, so let's say 48, let's say we want to get it into the 48 spot as a break of this mini base, the price can still get rejected into the 55 and into the 60. This is very, very aggressive. I don't like this resistance. The risk to reward ratio here, due to the fact that we have this resistance area, it's kind of tough. This is going to be like a Hail Mary type of trade. The 2 minute rotated. The stop in this particular case in the Dow that I'm looking, so this is not a trade yet, not a trade yet. I highlight not a trade yet. I'm looking for a possible stop, so I'm going to give you some parameters so you know how to adjust position sizing, and I'm talking here mostly to my traders that are here. So I'm looking for a stop of 10, 30, 0, 10, and I'm looking for an entry into the 50. So it's going to be 50 by 10. That's what I'm looking for. I would have liked the pullback to carry the price into 30,000 or a little bit into the 990 before it's doing any kind of rotation. And by the way, there's a mini sandwich developing here into Nasdaq over 43. Russell is relentless going higher. Of course it is. Hey, Joe. Uncle Russell. Okay, this is not a strong structure, but we're still holding that 20 spot. 20 spot is also is known as an institutional level. So there's a lot of support into this area right here, not only from price action, but there are some other indications as well. YM inside bar finished off in an inside bar. It's 9:55. We have 5 minutes to the top of the hour. So remember, we have the momentum all the way to 9:45 up. At 9:45, we had a shallow pullback into 10 o'clock. This could be a breakout into 10 o'clock. If I would have a little bit more confirmation in Nasdaq, I would like to engage. Nasdaq inside bar can potentially be a trade over 543, stop into the 520. So it would be 43 by 20. Nasdaq with very asymmetric target into the 50. So I'm just going to skip Nasdaq altogether. It's just too choppy. Oil is pulling back. This is not good for price action overall for the mini S&P. May take the whole entire market lower. So oil lower here may take the whole entire market lower. So we can see a pullback. We could see a breakout in YM, and then the trail to stop. Hey, Arth, yes. GC is a trade at 1875 and the stop is under 62. A first target is 80. The second target is going to be into the 83. Okay, let's do YM. YM into the top of the hour right here. I'm still thinking about it. 47 to 50, 50 right here, 50 by 10, 50 by 10, 50 by 10. And we have targets into 60, 80, and the whole number. It's getting right into 10 o'clock right here. So again, the targets are going to be, first target is going to be, actually it's 70. That's going to be the first target. The second target is going to be 80. We're going to go for 100 and the rest will be decided. And Nasdaq also is, I'm not going to do Nasdaq. I'm only going to do YM. The trade is posted above. YM long, 30.050. It's still trading at 49. It's trading at 50 right now. The stop is 30.010. The target is 70, 80, and 100. All right, guys. David, I think my time is also is almost up. Right here. Okay. So yep. Let's see. Okay. Yeah, we're top of the hour right here. Yep. So if you guys, like my approach to trading, and if you guys like what you saw today, you can find me at TradeOutLoud.com. We do have a live futures trading room, and we also have a live swing trader program, and that is for stocks. And hope to see you there. Thanks so much, David.
All right. Thanks, Anka.